Steve, which financial sectors do you think will be most impacted by global trade disputes and tariffs?
It's still the industrial sector. I mean, and within subsectors of that, obviously I mentioned Harley-Davidson. Autos are very heavily affected by this. It's still not they still haven't really hit, but we're talking about price increases on cars, and as it is when people are stretched, and there's a whole other subtext of subprime auto loans and stuff like that. So if consumers are having trouble affording cars now, add a few hundred or a few $1,000s to the price of a car, and it becomes that much less affordable. So that's more or less anything that supplies them. I would say anything involving metals and mining, but it's tricky there because are you a producer or are you a fabricator? So depending on where you stand in that, you're either benefiting from the tariffs. Steel and aluminum producers are ostensibly the winners in this, but does this actually end up depressing demand overall in the economy and negate the effect of the tariff that's supposed to benefit them? That's why the industrial sector and consumer discretionary sector, I highlighted them earlier because those are sort of the two easiest to pick on. Other than that, you really start to get into the weeds of a company-specific supply chains and company-specific demand chains. You can get into anything. The price of lobsters in Maine, somehow are affected by this. Again, no publicly traded lobster company that I know of. But the number of variables here make it very hard to model. I think right now the market is choosing the path of least resistance, which is generally to the upside. I think you're seeing the emphasis on one of the reasons you're seeing a lot of the FANG names do so well, besides the fact that their earnings are very good. But largely they're immune to this. I mean, if you go through those companies, Facebook and Google, Facebook really doesn't operate at all in China. Google, they're heavily censored as well. Netflix isn't really a Chinese story, and they have their own earnings problems. And Amazon, it's one of the places that actually has real competition is in China. So it's not, you can get around the tariff stuff with them. I think Amazon, ultimately, if consumer discretionary spending is hurt, Amazon will feel that. But that's such a fluky company anyway, and it's so immune from conventional valuation measures, at least in the short term, that it's easy to continue to put money into stocks that are working. I don't necessarily advocate that, but that's what we're seeing. We're seeing the broad market trending higher, and I think it's watch and wait for a lot of this stuff. We'll see how it's too hard to figure out right now. So the market, I think, is stepping back and saying we'll value it on an individual company basis when the time comes.